Hello everyone, my name is Erica Medina. I am a third-year student at the University of Houston Law Center, and today I will be talking about local and state taxes that entrepreneurs should pay close attention to. The local and state authorities have a variety of taxes and fees they use to generate revenue. Some we are familiar with, like tobacco taxes and fees, while others are a bit more obscure with narrow topics like the oyster sales fee. Today we will discuss three specific taxes that entrepreneurs should know about: the franchise tax, the sales tax, and property taxes. First up is the franchise tax. The Texas franchise tax is a privilege tax imposed on each taxable entity formed or organized in Texas or doing business in Texas. Taxable entities must file their franchise tax yearly. The deadline for filing is May 15th. All taxable entities must file their report. However, not all will have actual taxes due. There is a no tax due threshold, meaning an entity must still file their franchise taxes, but they will just file a no tax due report. These thresholds, along with franchise tax rates and deduction limits, vary from year to year. The Texas Comptroller will have the latest applicable rates on their websites. For example, in the years 2020 and 2021, the no tax due threshold is $1,180,000. This means that if your business's revenue is less than $1,180,000, you will have no franchise tax due, but must still file a report every year. If you fail to timely and accurately file your franchise taxes, your business may be subject to penalty. These may be a $50 penalty on each report filed after the due date, a 5% penalty if taxes are paid 1 to 30 days after the due date, a 10% penalty if taxes are paid over 30 days after the due date. When an entity fails to file a franchise tax report and/or pay franchise taxes, an additional possible penalty is loss of charter, meaning that entity loses its certificate of formation and status as an entity. However, this status can be reinstated. There are 6 steps to reinstatement, and they involve both the Texas Comptroller and the Texas Secretary of State. Step 1 starts at the Texas Comptroller. First, you must file any franchise taxes and information reports that are outstanding. Then, you must pay any taxes, penalties, or interest payments due. Once these steps are done, you can move on to Step 3. In Step 3, you must complete and submit Form 05391, the Tax Clearance Letter Request for Reinstatement. This form is available on the Comptroller's website, and you can submit it via mail or web file. You must receive your tax clearance form before moving on to the next stage. Once you receive your tax clearance form stating that the entity has satisfied all of its franchise tax obligations and is eligible for reinstatement, you must submit it to the Texas Secretary of State. You must also complete and submit the Secretary of State's application for reinstatement. After you've submitted both your tax clearance form and your application for reinstatement, you must pay the Secretary of State's filing fees, finalizing the last step necessary in order to secure reinstatement. And with that, we have covered some basics relating to the Texas franchise tax. Now we will move our discussion to the sales tax. Texas imposes a 6.25% state sales and use tax on all retail sales, leases and rentals of most goods, as well as taxable services. Additionally, local taxing jurisdictions can also impose up to 2% sales taxes. For example, let's look at Harris County. There is a 6.25% tax imposed by the state. Then the county imposes a 1% tax to fund the MTA and another 1% tax for city revenue. This brings the total sales tax for an item sold in Harris County to 8.25%. We are used to dealing with sales taxes as consumers, but now as sellers, you are responsible for collecting and remitting the correct amount to the controller's office. If you do not do this, you can owe additional taxes and may be assessed additional penalties as well as interest. The first step in complying with this directive is obtaining a Texas sales tax permit. First, what is a sales and use tax permit? Well, the Texas sales tax permit authorizes the seller to collect sales taxes on purchases made by its customers. Now you may be wondering, do I need a permit? And if you are engaged in business in Texas and you sell tangible property, lease or rent tangible property, or sell taxable services in Texas, you need a permit. You can get this permit in two ways. First, you can apply electronically using the Texas Online Sales Tax Registration Application System, or you can print an application from the Texas Sales and Use Tax Forms webpage and mail it to the comptroller. There is no fee for the application. However, based on the information, you could be required to post a security bond. As a permit holder, you are required to post your permit at your place of business, to collect sales taxes on all taxable sales, to timely report and pay the sales taxes, and to keep adequate records. Here is a useful example that breaks down how to figure out the tax to be reported on a sale. In this example, there is a t-shirt business in Austin where the sales tax rate is 8.25%. The customer is charged $20 for a t-shirt, and the invoice states that the price includes taxes. If you follow the problem along, you will find that $18.48 correspond to the sales price of the item, while $1.52 belongs to the taxes to be reported. We now move on to cover property taxes. Texas has no state property tax. However, local taxing units may impose and collect their own property taxes. As a business owner, you are required to report personal property that is used in your business. You must report this personal property through an annual property rendition that you will submit to the Harris County Appraisal District. Most businesses will need to file a general rendition form. However, some businesses may need additional forms. For example, if you own business vehicles. The filing deadline for renditions is April 15th. A rendition is a form that provides the Harris County Appraisal District information about the personal property that is used for the production of income, This property may include things like furniture, fixtures, equipment, computers, and more.